Hello, my friends. Brett Pattison with IGGA Global Advisors coming at you from the financial capital of the West, which is, my friend, Salt Lake City, Utah. Thank you for taking a few minutes of your time to address whether October will be a trick-or-treat month for the market. Let's discuss two things today, which everybody is asking the questions. And that is, what is going to happen in the month of October? Are we bullish or are we bearish? What's the market going to do? And we will also reiterate that history repeats itself. And I'll show you some statistics as far as that's concerned to hopefully share some ideas as to where the market may be heading. Now, up front, I've got to tell you, as we address the question, are we bullish or bearish, nobody knows exactly what's going to happen in the market. Nobody can forecast the market perfectly. All right? We look at history to help guide future decisions. We follow a process that's based on probabilities. What is the probability of X happening, right? That will get you to your financial goals, whatever those may be. That process is very important. That process is being followed every day at IGGA Global Advisors as Brian and I, as we discuss investments, as we discuss portfolios, as we discuss the market as a whole, we follow that process and we respect it. So I'd like to take you back into history, back to 2011. And I've mentioned this to a few clients, but obviously I'll mention it to all of you. And that is, this market right now reminds me a lot of 2011. You know, back in 2011, we had a market that was being impacted by news. We had the U.S. debt was downgraded in August of 2011, and you see the chart that you have in front of you. All right, you can see the months. This spans from 2011 through 12, but the red box highlights the area that I'd like to focus on, and that is, you can see in August when the debt was downgraded from AAA to AA plus. There were also some other things going on. You can sprinkle in some bad news about Greece. You can sprinkle in some bad news about global growth, but primarily it was the news that the debt was downgraded, and at the time, was a 2-year raging bull market. Well, during that time span, people thought it was done. It was over, all right? But you can see July, August, September, October, and then really in October, that's when the market started to gain some legs. And November had some volatility, but then the market really rebounded and is up around 60% since that time. All right. Now look at the chart action, because I believe it's closely related to how we are now. And I want to bring up, I believe that we could be right there in that 2011, market volatility. Let me explain. Here we got a chart of November of 2014 to present. You can see in August, again, just like in 2011, we spiraled downward. We're trading kind of in a range to where we've retested the lows a little bit. The conversation is not a debt downgrade as it was in 2011, but it's more interest rates. It's global growth. Sprinkle in some Greece, maybe not these months, but it's still in the news. So the stories have changed slightly, but the market reaction hasn't. And you can see outlined in red, that's where we are today. And I believe, nobody knows for sure, but I believe some more sideways action, hopefully before a rebound occurs, is where we find ourselves today. And I want to take us, again, back to 2011. You can see on the top part of this chart, we have the S&P 500. On the bottom half, we have the volatility index, which is called the VIX. Okay? Now, you can see that in 2011, again, we traded sideways through August, September, October. Then we've got the legs, and we rebounded from there. Now, what I want to point out now is the VIX. you can see, and I'm going to use my cursor here, you can see that we spiked up, and the VIX is just fear. It's, to keep it very simple, it measures fear. All right, it's a fear gauge based upon the options of the S&P 500, the SPX. But we had a spike in fear right around 47 and a half. The market traded sideways, and then we had one last, it was almost like a last fear, get it out of the way, last gasp. Oh no. Capitulation is what the market term is, before the VIX started to go down and the market started to go up. Now, what's different about 2011 to now is we haven't experienced that. Here's the VIX, again, volatility index, and the S&P 500. This is where we are today. We had this initial spike in the VIX. Fear came in. It's the most fear that we've had in a very, very long time, as we sent out a couple emails on it, right? The other thing that has not occurred is that fear has not come back necessarily. Certainly there's fear in the market, but we haven't had that second big spike in the volatility in the VIX. We haven't had that capitulation, if you want to call it that. That has not occurred, and that's something that I'm looking for. Now, it may not come. It may come. I'm looking for it, because if it's mimicking how pullbacks or corrections or even bear markets, how they end, we need that capitulation before that bear market or pullback correction, whatever you want to call this, before it ends, right? So there's a couple things that we're looking forward to, and really right now it's an opportunity in portfolios, as we follow our process, to be patient. We are scouring, and it's mostly Brian, as he's our stock, more of our stock analyst. He's scouring companies looking for the next great investment that are trading at a good value. And we also are very conservative with our portfolios for those that need it. We're focused on your goals, right? Whether they be growth or preservation of capital or income, we're focused on those goals. But we're being patient, okay, in the current market as it stands now. Now, a couple things that I want to remind you of, and that's the history of the stock market, to give you kind of an understanding as to where we are in the calendar. And we use history a lot, and some of you are familiar with this. Some of you may not have heard this. Hopefully you have, and this is review. If not, this will shine some light as to where we are in the current cycle within the calendar year, because there's two main parts to every year. There's November through April, and there's May through October. Those are the two big time frames as far as history is concerned. And why do I say that? Well, November through April, the market averages around a 7% return. Okay? November through April side, very bullish, risk-on type of environment, and it's an average of 7%. Well, May through October, you get an average of around 1%, 0.8%, May through October. So you can see there's a stark contrast between November through April time frame in the market and May through October. Now, it's not perfect. It doesn't happen every year, but probabilities are on your side. Again, our process is based on probabilities. Probabilities are on your side that this does work, all right? Again, not perfect, but history tells us it does work. In fact, let's take a look at the best months of the year are typically November, December, and April. In fact, we're encountering in November, December, January is the best 3-month time frame, all smashed together. But we're looking forward to those best months. I truly do hope they are best months this year, and I hope that the probabilities do work. Now, May through October, here's an interesting thing. May through October, you'll take us back to where we are now. The worst months are June, August, and September. That's the time frame we're just coming out of, right? A couple things that I want to look at real quick, and that is, here's back to 2011. Now, keep in mind the worst months of the year, June, August, September. You can see that in June, the market started to get a little tipsy. In August, certainly went down, and news was associated with that, as it oftentimes is in the summertime. And then in October, September, certainly bad month in October, and November, which is the good months, right? The good months start. That's when the market took off. Look at where we are today. June started going sideways. July, sideways action. August, September, boom. Ugly. Very, very ugly, right? So you can see that history is repeating itself, whether it will going forward. Our hope is that it will, so it can continue to grow your portfolios in the best way, which is a bull market. But we will see. That's where we are right now. So will it be a trick or treat in the month of October? Well, probably a little bit of a trick. But as we encounter November, if probabilities stay true, then November should begin that ascension higher for the rest of the year. Now, a couple things to pay attention to, okay, as far as this month and the next couple months are concerned, and that is we need an interest rate decision. October 27th, 28th, the Fed is meeting again. Yellen has said in a speech last week at a university, she said, expect rates to be raised this year. Expect the process to start this year, and then we'll continue the process through next year. All right? Now, whether that's in October, the 27th, 28th meeting, or whether that's December and the 15th, 16th December meeting, we'll see. We don't know, but we need them to do something, hopefully raise rates just so that there's certainty in the market, because right now there's too much uncertainty. Okay? So pay attention to that. And I'd also urge you, going back to interest rates, I'd also urge you to listen to our video. It's on our YouTube. It's on our website, YouTube channel. It's called The 3 Things to Know When Interest Rates Move Higher. And it's very important information. I would urge all of you to watch it if you have not. And that will give you some ideas as to how we're approaching the interest rate rising environment. Now, the second thing to pay attention to is the federal government budget conversations. Now, just yesterday, they pushed that off to December 11th. But anytime there's debt ceiling and all this other conversation like that, it creates uncertainty. The market doesn't like it. And that's December 11th. So that's something to pay attention to, whether we shut down the government or keep it running, right? And I will keep my political stance completely out of this, but it's something to pay attention to. Of course, the global mayhem, as I like to call it, is also something to pay attention to. Although I think that's third down the line. We'll continue to hear about China. We'll continue to hear about Europe. We'll continue to hear all about these areas of the market that may be slowing, which has kind of been on, it's been a news story since 2011. So nothing new, although the press likes to resurrect those articles, it seems like, every year. So those are the things to pay attention to. We will continue to manage portfolios based upon our process that we firmly believe in. If you have any questions, reach out to Brian or I. There's our contact information. We'd love to address any questions, comments, concerns that you may have. Until then, my friends, we will talk to you later. Thanks.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and/or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.